Imagine tomorrow 90% of your crypto portfolio is declared illegal. Institutions massively pull their liquidity, charts break through the ultimate Fibonacci bottoms, and you are left with useless tokens that can't be bought or sold on any major exchange. Sounds like a horror story from 2022? Not quite, because this is the harsh reality of March 2026, and its name is the Clarity Act. Today we have an emergency and probably the most important video of the year. Right now, the US Senate is deciding the fate of the entire altcoin market. The Clarity Act will divide crypto into two castes: clean digital commodities that will absorb billions of Wall Street dollars, and dirty securities that will be crushed by the SEC. In this video, I'll give you a full update on the Clarity Act status today. But more importantly, we are going to do a hardcore audit of the top projects. I will name the altcoins that are guaranteed to pass the so-called mature blockchain test and fly to the moon, and those that are in deep trouble right now. We'll dissect XRP, Stellar, Hedera Hashgraph, and Bittensor. Grab a seat, smash that like button in advance so the YouTube algorithm shows this video to other holders, and let's dive into the on-chain data and legal weeds. Let's go. Alright, let's skip the boring legal jargon and get straight to the point. What is the Clarity Act? In short, it's the US finally trying to end the years-long war between the SEC and the CFTC. Last July, this bill triumphantly passed the House of Representatives with massive bipartisan support. But right now, in early March 2026, the bill is stuck in the Senate Banking Committee. Why the delay? There are heavy negotiations around stablecoins and DeFi AML rules. President Trump and Treasury Secretary Scott Bessent are pressuring the Senate, demanding the bill be passed this spring, right before the midterms. We are literally counting the weeks, as the committee vote is expected in mid-March, and we could see the president's signature by June. But for us, as traders and investors, there's only one line in this law that matters, and it's called the Mature Blockchain Test. Memorize these rules, because this is how we're going to judge our altcoins. For a token to be recognized as a commodity, the blockchain must prove its decentralization with open source code and no single entity controlling the network. Most importantly, the 20% rule dictates that no issuer or affiliated group can hold 20% or more of the total token supply or have 20% of the voting power. Sounds logical, right? But you have no idea how many top projects are failing this test miserably right now. The green list. Let's start with the ones who don't need to worry. Bitcoin and Ethereum are the baseline, as they are already de facto recognized as commodities. They are joined by the old-school proof-of-work coins with no pre-mine and no central CEO, like Dogecoin and Litecoin. But let's talk about something more tech-driven. My favorite in the AI sector is Bittensor, or TAO. Why will TAO pass the Clarity Act with flying colors? First, it had a fair launch, just like Bitcoin, meaning no venture capital unlocks dumping on the order book. Second, the unique subnet architecture makes the network as distributed as possible, meaning there is no central authority holding over 20% of the supply to dictate the rules. If we look at the TAO chart, we can see how smart money is accumulating positions in consolidation zones. As soon as the Clarity Act is signed, TAO automatically gets the status of a digital commodity. For institutions wanting to invest in AI through crypto without regulatory risks, this is a massive green light. The Fibonacci extension targets here go way past previous all-time high. The red zone. XRP and XLM. Now for the spiciest part. You know I often trade XRP and XLM, which have massive potential in real-world asset tokenization and cross-border payments. But let's face the facts of this bill. Remember the rule that no issuer can hold 20% or more of the total token supply. What do we have with Ripple? Right now, Ripple has tens of billions of XRP locked in cryptographic escrow and on-chain wallets, which is way more than 20% of the total 100 billion supply. What does this mean? If the Clarity Act passes tomorrow in its current form, XRP technically fails the mature blockchain test and falls straight into the SEC's jurisdiction as a security. And this is after years of lawsuits. But don't rush to dump your bags, because there is a catch. The bill allows for a transition period. Ripple will have two options. Either they prove that the escrow accounts technically do not give them control over the network, or, and this is my favorite scenario, Ripple will have to aggressively burn the escrow tokens or distribute them to drop their share below 20%. Do you realize what kind of supply shock that would be? If Brad Garlinghouse announces the burning of billions of XRP just to comply with the Clarity Act, we will see a massive God candle that breaks the ceiling. The exact same logic applies to Stellar and the Stellar Development Foundation's massive coin reserves. Controversial projects, HBAR and Solana. Moving on to my favorite fundamental play, Hedera Hashgraph, HBAR. You guys always ask me to cover this asset, and I believe in HBAR because it's the #1 enterprise blockchain. But how does the Clarity Act view Hedera's governing council? By law, the network cannot be controlled by a person or group of persons under common control. Hedera has up to 39 nodes run by giants like Google, Boeing, and IBM. And since no single corporation owns 20% of the voting power, they can legally prove their decentralization. Moreover, if HBAR gets the commodity stamp from the CFTC, institutional capital will simply flood the ecosystem because Fortune 500 companies are terrified of building apps in a gray area. But there is a risk. Regulators might pick on the fact that regular retail users, you and me, cannot easily run an anonymous node and influence consensus like we can on Bitcoin. Plus, we need to closely watch Swirlds Labs' treasury to ensure their share doesn't exceed the 20% limit. I rate HBAR's chances of successfully passing the law as very high, but the road will have legal hurdles. And a quick word on Solana. Experts are already sounding the alarm that Solana and Cardano might fail the maturity test initially. The reason for Solana is the high concentration of tokens among VCs and insiders, plus the history of network outages where developers essentially rebooted the blockchain. To the SEC, this is a clear sign of centralized control, meaning if Solana doesn't change its tokenomics, it could face serious delisting issues. Trading plan and conclusion. Guys, March to June 2026 will be a historic moment. The Clarity Act isn't just a piece of paper. It's a filter that will wash away outright scams and centralized tokens, leaving only fundamentally strong projects. My trading plan for the coming months is simple. Number 1, I am accumulating TAO, as it's a safe haven among altcoins with perfect tokenomics for the new laws. Number 2, I'm keeping my finger on the pulse with XRP and HBAR, where any news about an escrow burn or successful blockchain certification will cause a massive double-digit pump. I've placed limit orders at key support levels along the moving averages. Number 3, I'm hedging my risks. Because if the bill gets delayed again due to political disagreements, we could see a local dump driven by market disappointment. Always use stop losses. Let me know in the comments right now. Do you think Ripple will burn their 40 billion XRP in escrow to save themselves from the SEC? Or will they fight in court until the bitter end? I'll pin the most well-argued comment to the top. Don't forget to subscribe to my Telegram channel link in the description. I post my trades there in real time and share full on-chain whale breakdowns. Keep practicing, stick to your risk management, drink your electrolytes after your run, and I'll see you in the next video. Peace.